In Investing 101 today, Dave Bartosiak of Zacks.com joins us now to talk about when to enter a trade or enter an investment. Good to have you on the show.
Good to be here.
So let's just break it down here. Say somebody's considering a stock or maybe even a future that they want to invest in or show up in their portfolio. So what's the first step here, Dave?
Okay, so I'm going to show you two different triggers that you can use in order to enter your trade. So the first of those is going to be using moving averages. So I'm going to get a shorter term moving average and a longer term moving average. So for example, let's say we use the 50-day moving average and a 21-day moving average. So what I'm going to do is I'm going to wait until the faster moving average, or the short term one, the 21-day, goes from being underneath the 50 to above the 50. So that tells you that the shorter term trend is starting to change in favor of the longer term direction. So that's when you want to go ahead and enter long, when you have that moving average crossover. So that's the first way that you can go ahead and enter a trade.
So what's the second way? This has something to do with a commodity channel index.
That's right. I tried to make it sound fancy. So the commodity channel index, or the CCI for short, is an oscillator that goes between positive like 200 or 300 and negative 200 or 300. So it's not normalized, it's just kind of a weird thing. Anyway, that's not the important part. So what you want to do is you want to wait for that commodity channel index to get oversold. So that's areas below negative 100. And then you wait for it to cross back up through either the negative 100 line or, for more safety, cross up above the 0 line. So when you see that happen, that's another great short-term trigger, tells you it's time to go long in the stock.
Let's break this down even farther. Okay, so moving average you can use with a stock, you could use it with gold, oil, silver, anything you want to invest in. But with a commodity channel index, do you have to just stick to the commodities? Do they have to be the tangibles?
You don't. It's a little bit of a misnomer. It was just created originally for the commodities market, but you could use it for stocks too. And then that was, basically to enter on the long side. Now, if we wanted to flip it on its head and go ahead and try to find a short entry, or even figure out when you need to sell, you just take those rules and just flip them over. So for the moving averages, you're going to look for the shorter one to dip below the longer one. And then for the CCI, you're going to wait till it gets up above 100 and then cuts back down through the 0 line.
Now, Dave, I know professional people like yourselves, you have different platforms that you follow to show you the moving averages or the commodity index, but you can actually get that for free on places such as Bar Chart. I know it's out there.
Yeah, Bar Chart's a good site. Yahoo Finance still has their charts that you can set up pretty basic with the CCI, and especially the moving averages. I mean, any place you go is going to have free moving averages. The other place that I personally like to go is freestockcharts.com, because you can get a lot of different technical indicators inside of that, and they give you free estimated real-time quotes. It's not really the same as as having the real deal, but it's pretty darn close.
Well, thanks for that free advice, Dave.
Yep.